So we are doing the sum of Kelbrook, and what is it that they're actually wanting us to make?
Extract from statement of financial position.
Okay, they want an extract of statement of financial position. Okay,
Yeah, but only the reserve, equity and reserve section.
equity and reserve section. That means it will have only the share capital and the reserves. Are you with me?
Yes,
Okay, fine. And this they want it on which date?
30 September 2015.
The 30th of September is my last date. If my last date is 30th of September 2015, so what would be the first date be? 2014
October,
plus 1.
October,
This is
yeah.
minus 1 and that
Okay,
is plus 1.
November,
October.
yeah,
So 1st October 2014. Okay.
yeah,
Are you with me? They want an extract of the equity and reserves section. Are you with me?
yes,
Okay, fine. So I will write equity and reserves. When I write equity and
yeah.
reserves, the first thing, what will I say? I will say ordinary share capital.
Mm-hmm.
And when I see over here, I can also see general reserves and I can also see retained earnings.
But the ordinary share capital is 90,000, right?
Right now, I don't know. I have to read. We have to do adjustments also. We don't know
Okay,
whether it is the final figure or there are something that is going to happen in this.
okay.
With me?
Yeah,
Okay. So the ordinary share capital is 180,000 shares.
capital, yeah,
180,000 shares into what?
0.50, which is
0.50.
90,000,
Sorry,
which is 90,000.
which is 90,000. So right now I'm writing 180,000 into 0.50, which is how much? 90,000. I don't know
90,000.
whether this is the final answer or no. So I'm just keeping it over here.
Okay,
Okay. Now on the first date, I have general reserves. How much?
4,000.
I know that my first date is 1st of October 2014. So on the
Yeah,
first date, I have general reserves of 4,000 and on the first date, I have retained earnings of 5,500. Are you with me?
yes.
Okay. Profit for the year is 9,000. Can you tell me which section profit for the year affects?
Retained earnings and the total.
Okay. But here we don't have any total column, right?
Yeah,
The profit for the year will increase my retained earnings. Yes?
yes.
Okay, fine. Very good. 2,000 was transferred to general reserves.
So subtract from the retained earning and add it to the general reserve.
I will subtract it from the retained earnings and add it to the general reserves. Interim dividend was paid.
Uh, Subtract from retained earnings.
Subtracted from the retained earnings. No dividend were proposed at the end of the year. That has nothing to do. That means there was no adjustment in the share capital. Are you with me?
Yes.
The share capital will go to the final column.
Yeah.
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 What is the final column? 90,000. There was no adjustment related to share capital. So I'm writing share capital as 90,000.
Yes.
General reserves,
6,000.
6,000. Retained earnings.
Retained earning is 8,500.
How? 5,500
5,500 plus 9,000 minus 2,000 minus 4,000.
plus 9,000 minus 2,000 minus 4,500. Interim dividend is 4,500.
Okay,
Hmm?
so 8,000.
8,000. And the total of all this will become my equity and reserves. That
Yeah,
is 98,000 plus 6,000, 104,000.
yes.
It's done. Was it hard?
What?
Was it hard?
No, 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 miss. It was easy.
Okay, fine. Can I go to the next one?
Yes.
Okay, fine. What do they want you to calculate?
Calculate the cost of sales for the year ended.
How do you calculate the cost of sales?
Revenue less cost of sales.
Okay, revenue less cost of sales. Do you have the revenue given to you directly?
Yes,
Where?
529,500.
Where?
Uh, it's written revenue 529,500 in the question.
Hmm. Okay, before I go to anything, what will I do is I will read the question and I will see what will go where. Now I exactly know where are the things and where. Just a minute, okay? Okay, come on, start. 7% debentures, where will this go?
Non-current liability.
Non-current liabilities.
Statement of financial position.
Statement of financial position. But the interest on debentures, where will it come?
In the income statement, other
In the
expenses.
income statement under finance cost.
Yeah.
Hmm? Administrative expenses,
Under in the income statement,
other
under
expenses.
operating expenses.
Yeah, operating expenses. Carriage inward, it is added to purchases.
Yeah.
Distribution cost, other expenses,
Uh,
operating.
yeah.
Debenture interest paid,
Income statement.
finance costs.
Yes.
If you see your debenture, you have how many debentures? You have debentures worth how much?
720,000.
20,000.
Yeah.
You have debentures worth how much? 20,000.
20.
So if you take 7% of it, it becomes how much?
7% of 20,000.
1,400.
Yeah.
Okay. So your debenture interest is 1,400, but you have paid how much?
700. So we
Can
subtract
I say
700.
outstanding is more 700?
Yeah.
Okay. So when they say 7%, it means that your interest on debentures is 7%.
Okay.
That means your expenditure for the year is 7%.
Yeah.
But you have paid 700. You have
Mm-hmm.
paid how
So
much?
we
700.
700.
That means 700 is yet to be paid.
Yes.
Okay. You should have these implications in your mind. So your expenditure for the year is 1,400.
Okay.
With me,
Yes.
this is your opening inventory.
Yeah.
Okay. Non-current assets at book value. NCA,
Non-current assets. Yeah.
provision for doubtful debts.
It goes in the statement of financial position.
Okay, now understand. Okay, purchases. It's their
Uh,
revenue,
in cost of
trade
sales.
receivable, current assets. This is cost of sales. And revenue is
Yeah.
revenue. You have your closing
Yes.
inventory,
Yeah, 59,000.
cost of sales. Then they have told
Yes.
you interest on debentures has been paid up to 30th of March 2020. We have already calculated the outstanding, right?
Yeah,
For
700.
April, May, June, July, August, and September, we already calculated the outstanding, correct?
Yes.
Okay, fine. Go to the next one. Rate
Administrative expenses.
includes,
So, so we need to add this in the administrative expenses.
no dear, understand. Administrative expenses, it includes
Oh, okay.
1,200 rates that has been paid up to 31st of March 2021. So
Yeah,
whenever there is any word include, you have to exclude
we
it.
subtract.
Understand one thing. So
Yes.
administrative expenses has 1,200 of rates, which
Yeah,
is how many months? 6 months.
6 months.
That means per month, how much is the rate?
1,000. No, no, 100.
Per month would be 1,200 divided by 6. So per month rates is how much?
200.
Per month
200.
rate is 200. My year ends on 30th of September 2020. Are you with
Yeah.
me? So this
Yes.
rates has been paid up to 31st of March 2021. Are you with me?
Yes.
Okay, fine. So can you tell me September 2020 till March 2021 is how many months? October, November, December, Jan,
Yeah.
Feb,
January,
March.
February, March.
That means all the 6 months are after my year ends.
Yes.
None
So we
of the
subtract.
rates is related to the current year.
Yes.
Understand
What
the
if
fact
one
first.
month is? Yeah.
Understand. I have paid rates for 6 months.
Okay.
And though that 6 month ends on 31st of March 2021.
Yeah.
Are you with me?
Yes.
I will see from October to March how many months are there. September, after September. So after
Six
September,
months.
I have October, November, December, January, February, March. That means these rates are not related to the current year. First, you need to understand this fact. Is this rates related to current year or it is related to the next which starts from October to March?
Yeah. Next year.
It is related to next year. So anything that is not related to the current year has to be subtracted.
Yes.
So I will subtract 1,200 from this and I will put it on my question and I incorporated this adjustment. Are you with me?
Yeah.
Okay, fine. Go to the next one.
Distribution costs of 800 were outstanding at 30 September 2020.
So what do I do if there is any outstanding?
We add.
We add. Okay.
Yes.
Then next one.
Non-current assets should be depreciated by 10% per annum using the reducing balance method.
What is the reducing balance method? Costs minus debt to date, you get the reduced value. And on
Yes.
the reduced value, you will remove your depreciation. So, what is the
Yeah.
non current asset? They have already given you the reduced value.
Yes.
They have already given you the book
They are
value.
given book value. Yeah.
Book value
So
is the
six one
reduced
zero
value.
one two. Yeah.
Yes. On this,
Yeah.
you remove your depreciation 10%. So, your
Yeah.
depreciation 10% is how much?
It's uh it's 61,000.
Hmm? 61,000.
61,000.
I am writing over here 61,000 is depreciation of non-current asset. With me?
Yes.
And this will go in other expenses operating months.
Okay.
Okay.
Yeah.
Okay. Go to the next one.
Yeah. So irrecoverable debt of 500 are to be written off.
Irrecoverable debts, other expenses, which ones? Operating.
Yeah.
Hmm?
We, so we write bad debts in operating.
Hmm. In finance cost, you
Okay.
have only two things: debenture interest and
Interest
preferred
and
dividend.
yeah.
Okay?
Yeah. So any other expense we write it in operating
Operating
expenses.
expenses. 2% provision for doubtful debts is to be
So
maintained at 2% of trade receivables. This I will
2%.
do it, okay, together with you. Just have to understand that provision for doubtful debts is created as a percentage of your NTR. What is NTR?
Net trade receivables.
Net trade receivables. Just keep this in mind. And how do you get your net trade receivables? Trade
Trade
receivables
receivables.
minus bad debts, new bad debts.
Yeah.
So I have
Okay.
done all my adjustments. Now I need to solve cost of sales. How do you get cost of sales?
So sales, we do the opening inventory first,
Come on. Opening inventory.
and then
How much
purchases.
is opening inventory?
Opening inventory 66,000.
66,000.
Yeah.
Then
Purchases.
you have some adjustment that is related to purchases, that is carriage inward.
Yeah. So we add it, right?
So all the
So
adjustment related to purchase will be done in the first column.
263
Purchases is
0.
263,000.
Yeah.
Carriage inward is 1,500.
264 500.
Opening inventory plus carriage inward
Uh 330 500.
less closing inventory
Yes. Do we have closing inventory?
less
Yeah, 59,000.
cost of sales.
So 271 500.
Done.
Yes.
Now they want increase or decrease in provisions. So what is your old provisions? The one that is given in the trial balance is your old provisions.
1,000.
1000.
Okay, so that's 1,000.
New provisions.
Two.
Provision is always
Uh,
created as a
this is
percentage of your net NTR. That
okay.
is your trade
Yeah.
receivable
So first
8500 minus your
minus
bad
bad debt.
debts. Minus
I,
your bad debts and the percentage is 2%.
yes.
So 8500 minus 500 percentage is 2%.
So 1,600.
1006.
Yes.
Then they want increase or decrease. How much is increase or decrease?
600 is
Old
increasing.
minus new. Old is
Yes.
1000. New is
Oh, okay.
600.
So
Old
minus
minus
600.
new is 600. It's minus
Yes.
600. That means there is an increase. Okay, if old
Yes.
minus new is negative, that means it is a loss for you and you record it in other expenses.
Okay.
Done?
Yes.
Now you have to make income statement. Income statement starts with revenue
Revenue, which is
less cost of sales.
5295. We already have cost of sales.
Your revenue
279,500.
is 529,500
Five. Yeah.
and your cost of sales is 271,500.
Yeah.
So you have your gross profit as 258,000.
Yes. Now we do less operating expenses.
What are your operating expenses?
Administrative
Administrative.
expenses,
You have
and
already done
then
your adjustments.
distribution
44,000 minus 1,002.
minus 1,300.
So what is it? 42,800. I see
Yeah,
this
42,800.
depreciation also.
Yeah,
Depreciation on
distribute
current assets. 61,000. I see
which
this
way is that
increase in provision. Here we calculated, right?
Oh yeah, yeah, okay.
I see this increase in provisions.
Yes, we write increase in provision.
How
And
much is
miss
that?
also distribution cost.
Then we also have bad debts.
Yeah, and distribution cost.
500. Then we'll go. Then we'll go in the order. Distribution costs 38,800 plus 800.
4,600.
38,000 plus 800. So what is the
Okay.
distribution cost? 38,800.
Yes.
What else you have? Debenture interest is finance cost. All operating expenses done?
Yeah, I think so. Yeah.
Yes, all operating expenses done. What is the total of your operating expenses? 143,700.
Yes.
Hmm?
So 258.
So what is it coming up to?
114,300.
114,300.
Yes.
This will become what? Your profit from operations.
Yes. Profit from operation. And
Then what
then we do
is
less
the tax?
finance cost. Less finance cost.
What is your finance cost?
Debentures and preference dividends.
But we don't have
They didn't
any
give any.
preference dividend. Your debenture
Yeah.
interest was 1400 as far as
Yes.
I remember. 20,000, okay? Then
Yeah.
you minus your debenture interest, you get 112,900, which is your profit for the year. Yes,
Yeah. Yes. Miss, isn't this profit before tax?
but now there's no tax given to you, right?
Yeah. So
And
we
I
just
go to
write
the
it. Okay.
next one.
Yes.
Put a tick in the correct column to show the effect on equity. You want to show what will increase or decrease the equity or what will have no effect. If you issue
Yeah.
ordinary shares, will it increase the equity or decrease?
It will increase the equity.
If you pay ordinary share dividend, will it increase the equity or decrease?
Decrease.
If you pay dividend, your retained earnings will fall, so your equity will fall.
Yes.
If you're just thinking to give dividend, proposal, you're thinking to give
Yeah.
dividend, will it
So
increase or
no
decrease?
effect. No effect.
You transfer from retained earning to general reserves. From
No
one
effect.
section of equity, you transfer to the other section, it will have no effect on your equity.
Yes.
Okay, so this completes the sum of JP Limited.